Hello, people who love fitness, and welcome back to another episode of turning 10K to 100K over time. And if you are someone who's into fitness, you've probably heard of the brand called Lululemon, and you will probably know of their stock performance in recent time if you are someone who's keeping up with the financial markets. So Lululemon has suffered a immense drawdown from its high in late 2023 to where prices are currently trading at. So there's a drawdown of about 60%, which is quite crazy, right? And I think many finance creators out there have talked about Lululemon, and I also want to share my thoughts. So I think there are some YouTubers out there who advocate like, oh, you should buy into the Lululemon dip, but should you really buy into Lululemon? And I think the key answer to that is to understand its current business model and its valuation, and what are the catalysts that will drive the stock price for a reversal. So, what is Lululemon? So, if you have been living under the rock, well, Lululemon is a company, athletic wear company that sells all your famous yoga pants, especially a lot of fitness wear for women, guys, and they sell primarily through a couple of channels. They do it through their retail physical stores, the e-commerce site like this website over here. And I think it's a very straightforward business, right? You like fitness, you buy fitness wear, and you wear the fitness wear to do your exercises, or even to wear it out casually, right? It has become sort of something like a fashion trend in recent times. So let's look at the price point of Lululemon. So if you can look at these products, right, you can see that it's not very cheap. Like compared to your, oh, sorry, let's go to the best sellers. Like compared to your normal athletic wear that you could buy from like your Decathlon, your Costco, your cheaper alternatives. Like I would even say like compared to Adidas and things like that, right? It's a brands like that. Lululemon is very expensive. It's on the higher end of the fitness wear scene, and its main target audience is largely women. But in recent times, it has also started selling to men. And their competitors, like I mentioned earlier, your big sports name, your Nike, Adidas, and also up and coming names such as Alo. You've probably seen YouTube ads for it recently. Other cheaper alternatives like your Costco's, your cheap brandless fitness wear that you could buy from random e-commerce sites like Alibaba, Taobao, things like that. So the business has some modes, right? Number one, which I think everybody will know, is its branding, which is why it's allowed to be priced that high. It's supply chain and distribution, so you don't get to Lululemon's scale without having productive and efficient operations, right? And this distribution network, so it's able to get its products from one end to another, these retail stores, and then eventually to the end consumer effectively and efficiently, and probably at a decent price as well, a decent cost as well. But this has come under pressure recently, which I'll share more later. And lastly, I think some of its athletic wear has some form of technology and patterns to make it, I don't know, maybe it feels better when you exercise, something like that. But I wouldn't say it's particularly that strong. The strongest mode that you would have is probably branding. And recently, well, it was just last week, right? Lululemon's stock plunged further plunge further on its earnings. So what exactly happened in its earnings? So you could just easily go to Lululemon's website, investors relations, to find out what happened. But I will use toppenguins.com's free news tool and just search Lulu, and I'll get to see like all its news. And yeah, I usually do this to just go straight to understand what the media thinks about Lululemon. So currently, right, um, it apparently missed just the revenue targets set by analysts by over 40 million. Revenue increased 6.8% year on year. And EPS, well, they beat by 0.25 per share. So here, I wouldn't. So let me just consolidate what happened and it was announced in its recent earnings report, right? But released by the company, so you don't have to go and read it. But I believe that you should read it as well. And also, how I get to understand like whether the company missed high targets or not is by using StockBanks.com's earnings calendar tool. So as you can see last week, if I just click that Lulu, I can see that its EPS actually beat, while its revenue missed. Yep. So that's that. You can use that tool to check out your other companies, even like companies that are reporting this week or the next. Yep. So key financials of the earnings, recent earnings announcement. Sales was up 6.8% compared to last year. Sales, comparable sales, was increased only 1% year on year, which I think is incredibly weak, right? Especially since in the US market, which is the Lululemon's biggest market, US store comp sales actually declined 4%. So meaning like for example, a store, the same store, if you compare it, it's performing weaker year on year, right? While the silver lining is an international comp sales increased by 50%, but whether this could be sustained in the face of increasing competition from all sorts of new brands like LO is another thing, right? And profits declined to $3.10 per share compared to $3.15 just last year. Gross margins declined 110 basis points. So this shows what has been happening with the business, right? It's heavy suffering from a lot of price competition, um, competition from other competitors, and also margins increasing. Gross margins decreasing, meaning it's getting cost pressured as well. So this is probably due to tariffs, right? That Trump set. So Lululemon probably manufactures a lot of their products overseas, and to ship it over to the US, right? You probably has to pay more now than before, right? And its balance sheet, well, it's not really the focus of investors and markets at the moment, but it still looks relatively healthy, right? In terms of its, its cash holdings, its debt, things like that. But with the exception of one thing, so inventory has increased 21% year over year. So this indicates that perhaps the products are not selling as well. The seasonal products are not hitting, you know, catching the retail market's attention, which is why you're not selling as well. And this is a bad sign. So if your inventory is increasing, you probably have to run a lot of price cuts, promotions to sell it, and you probably won't earn as much as before. And this also it implies that Lululemon is losing its sense with the retail market. Cash flow, well, not really the focus of investors also at the moment, where everything is focused on its continued sales growth, whether Lululemon can sustain its sales growth in the US market. Yep. But one thing to note that operating cash flow has declined by over 50% year on year. Again, this either means that their cost pressures is mounting up because of tariffs, and also they're just not growing as fast as were before. And this is all reflected in their guidance. So for the full year guidance of 2025, they have lowered sales guidance again. So they're now expecting growth of just 2 to 4%, and it's lower than the analyst consensus estimates. Same thing for profit as well. It has been reduced quite heavily, and it's quite missed the mark of $14.58 58 cents set by analysts, where the mid range is now just at about $12.80. Likewise, guidance for Q3 FY24 is lower than before. Guidance has been reduced, which is not good. So this means that the company is expecting a lot of headwinds, probably cannot hit the sales target that is set previously at the start of the year. And yeah, so what happened what and my key takeaways from the earnings call. So you can actually also use stopbanking.com's free tool, right? Look at the earnings transcript of the Lululemon's earnings call. So basically, I would just summarize it for you as I read through it. The main issue the company blames on its current cost pressure is tariffs, right? So tariffs are impacting their margins adversely. And as mentioned earlier, given that Lulu probably manufactures overseas, the unit landed cost probably surged because of the impact of tariffs. And there's only probably no cheaper alternatives to manufacture their products in, right? I think doesn't make sense for them to bring manufacturing back to the US as well, because this is likely to be very, very expensive as well and unlikely to protect their margin. So what the management has done so far is to increase their prices, which I feel is not a long-term sustainable solution. Pricing increases can only be done when your value of the product offering has increased, so it matches the demand and supply in a sense, right? So it doesn't make sense for them to keep increasing their prices where their product quality has maintained or even declined in terms of the user's perspective. Second, weaker than expected comparable sales. US sales decline, which means there's a sign of competitiveness in the US market, and Lulu is not keeping up, right? And it's missing the analyst estimate as well of 2.2%. Comp sales was up only 1% year on year, right? And number three, management also said that their whole product lineup needs a deeper look into. So their new product lineups, the seasonal launches are not responding as well and as anticipated by management. So this is not good, right? So this means that management and Lulu's lineup is not catching the attention of the retail market. And this means, right, other competitors have the opportunity to acquire Lulu's existing customer base at a much, I would say, easier, right? There's lower barriers to entry now. If your products are not good, new launches, right? Consumers probably look into more attractive ones. So the thing about the retail market for fashion, right? It changes too fast. The trends move too quickly because of social media, things like that, and influencers, right? So whatever they wear, most likely the general market will catch up to them. And if Lulu is not, creating new products that continue to capture the attention and the wallets of all these consumers, right? Then probably they will start to lose out very, very quickly and it can snowball fast, which is what happened with Gucci and Kering Group, for example. So Gucci sales are not doing that well in recent years. And if you look at Kering Group's stock price, it has also reflected the same performance, right? So if you are looking to buy into Lululemon's dip, you have to make sure that the new products they are launching has to be solid and continue to capture the very, very fickle-minded and hard to convince attention of fashionistas and all these fit people out there. Yep. And again, as mentioned, inventory increased by 21%. It's not a good look. Products are not selling as well as expected. And also, management also indicated that consumers are spending less on apparel overall, less on performance activewear, and are being more selective in their purchases, seeking out new styles. So this is coupled with like a slowing, I would say, U.S. economy where you see job job numbers are not reporting as well as, for example, last Friday, right? Your new employment claims have dropped and severely missed the targets. So there probably is going to be some rate cuts coming up ahead, which could help boost the economy. But whether they will continue to spend on these expensive products that Lululemon sell is another thing, right? The only silver lining from their whole entire earnings call, right, is that there is increased traffic in China that's offsetting the declining traffic in the US. Total revenue increased 25% in China year on year, but one thing to note is that the earnings came in at a lower end of expectation, and they are starting to see headwinds in tier one cities in China. So probably they're gonna expect like sales to slow down in China as well, which their only silver lining that's to continue to drive sales for now. And again, as I mentioned, if their current product base lineup is not gonna be revamped to capture the attention of consumers, right? You probably see the same thing start to happen in other markets as well, where other competitors are likely going to go in there and outcompete Lululemon, right? And internationally, total revenue increased 90% year on year. So, yep, the only good thing is that foreign markets are still helping, Lululemon with their growth. And I also want to share my thoughts on the current valuations of Lululemon, right? So if you see what's happening right now, sales growth has slowed drastically. That's one thing. They're facing a lot of headwinds. That's another in terms of getting their product lineups out there to convince to respark growth again. There's competition as economic slowdown, and generally when there's an economic slowdown, you probably won't see sustained demand for your all this expensive, not needed, non-necessity clothing, right? So to keep that in mind as you look at the valuations. So looking at Lululemon's valuations, right, we can see that um, its PE ratio, like if you look at the trend, it has fallen off quite heavily from its highs back in 2023. PE ratio, PS ratio and PEG ratio have sort of reached on paper very attractive levels, right? And if you look at its trailing 12 months, so this PE ratio, PS ratio, and PEG ratios are based on last 12 months earnings, right? And you can see it has fallen off to uh, quite a historical low. And if you look at the trailing 12 months PE ratio, it's currently trading at 11.24, PS trading at 1.77, and PB is trading at 4.57. So All of these numbers on paper look very attractive, right? 11.24 P ratio, 1.77 PS is all very attractive uh, numbers for a very popular companies such as Lululemon. And also its valuations have been trading at historical lows, right? And I think if you are like a just someone that's buying stocks based on valuation, I think Lululemon is probably a very attractive target to you. But you have to account, like I mentioned earlier, that there is a lot of headwinds. Company's growth is slowing drastically, and because of that, I still feel valuation is still relatively high for what's happening right now. And to respark my interest, that probably needs to be a lot of catalysts, right? So number one, Lululemon needs a new product range to recapture the target audience, especially in the US to drive sales there. So I think a lot of eyes, analysts' eyes, the market's eyes will be on whether US growth can be there's a resurgence in US growth again, right? And the management needs to show that it has the ability to capture and set new trends over time. So it's not just a one off kind of thing, right? So they don't just launch one lineup of like those yoga tights and then that's it. Because there will always be alternative out there in the fashion world where trends are so fast and there'll be new products coming, new companies coming in to take away your meat, right? And again, we want to see these new product launches that captures the US market's attention, translate to continuation in expansion plans, growth in the US. You want to see more stores opening in the US. You want to see comparable sales start to increase again. And what you want to see is also your international sales continue with sales growth. And also, lastly, um, I think there needs to be a solution to the margin and tariff issue. So this is negatively impacting the company's profitability, and especially since you're just selling yoga shorts, right? Yoga pants, right? It's not like you have a lot of pricing power to play with. There will eventually be a point where Lululemon will have to compete in terms of price, especially if it's not launching new products. And how they can compete on price, how much they can compete on price, it depends on their margins, and their margins are now getting pressured by the tariffs. So, um, Lululemon needs to come up with a new solution to the tariffs issue. Maybe a revamp their supply chain, a new distribution, a go-to-market or manufacturing system. And this is the management's problem to solve, right? And lastly, what are the downside risks I see to continue owning this business? Well, number one is failure to drive sales again. We see sales start to stagnate and even decline. And like I mentioned, you can't solely rely on the international US market, Chinese market to drive sales because eventually Lulu's competitors will go into these markets as well. And again, you might see a weakening in growth. Secondly, the industry is highly cyclical in nature, right? It's highly competitive. So even if a Lulu gets one product cycle right, the next one right doesn't mean that it'll continue to keep getting it right. So Lululemon is probably not a very very long term hold. If you want to invest in a company and you believe in its resurgence, right, you probably invest in it for the next couple of years only, or maybe I say 1 to 2 years before the same issue may come back and haunt them again. And lastly, economic slowdown in the near term. The tariffs impact will continue to spill across the economy. And Lululemon's products, as mentioned, because in the higher price range for athletic wear, it's not a necessity, and probably see demand drop. So overall, my thoughts are I'm definitely not a deep buyer here. Lulu's management needs to show that they can steer the business across an increasingly competitive landscape and resolve the tariff issue, or at least maintain their profitability, right, if they don't resolve the tariff issue. Valuations are high relative to the current growth trajectory, but if management is able to show that they're able to drive sales with new product launches in the short term through maybe a new product release cycle, right? Like how Crocs did with their new, sorry, not a new, but with their iconic shoes, right? There could be a lot of upside potential share price wise, especially since you see how fast Lulu fell. Well, it's like a spring, right? The faster it falls, probably the faster it bounces back. But this is all contingent on Lululemon being able to release new product launches to get the markets excited again. But that's all. Thank you.